focus. Ideate, innovate, enable.
Hello and welcome to Decoding Business Growth. I'm Sumaira Abdi. Now, most business decisions involve a step into the unknown that is to some degree unmeasurable, said author Frank Knight in his book Risk, Uncertainty and Profit. Frank Knight introduced the concept of risk taking as a central characteristic of entrepreneurship. Now, history clearly shows that all successful entrepreneurs are those that have walked the unbeaten path, fraught with risks, and have been able to fight against all the odds that have surfaced. Well, the hero of today's episode, Madan Mohanka, is a clear example of a man who took many risks in his business and came out shining. Mohanka set up Tega Industries in 1976 to manufacture abrasion-resistant rubber mill lining products used in the mining and cement industry, which was a completely new technology for India. The result? He set up his plant before there were even takers for those products. But Mohanka never lost hope. He kept at it. Now, some 3 decades later, Tega Industries, which is into supplying products for the mining industry, has emerged as the second largest company in the world by way of market share. Take a look at the Tega Industries story and you'll know why it's important never to lose your focus or heart if you want to succeed.
To Hell and Back is the story of Kolkata-based Tega Industries, the flagship company of the Tega Group. Tega was on the brink of bankruptcy in 1979 with no orders and no money to pay salaries. Today, its fortunes have changed dramatically. The company has become the second largest player in the world in rubber mill lining products for the mining industry. A major chunk of its turnover comes from exports to 72 countries from its 6 plants located in Kolkata, Gujarat, Australia, South Africa and Chile. How did this turnaround happen? It is sheer grit, passion and determination of the founder Madan Mohanka that saw Tega come a long way, from being a local company to a truly global company in mining equipment and solutions. Madan, after completing his graduation in engineering in 1964, opted to do his MBA from the country's premier institute, IIM Ahmedabad. After doing his MBA, Madan joined his family's electrical business, which had begun in Jamshedpur way back in the 1940s. But soon, 26-year-old Madan became restless. He wanted to do something new. In June 1971, Madan came across an ad of Switzerland-based Tega in a mining journal. Tega specialized in the design, development and manufacture of abrasion-resistant rubber products for the mining and cement industry. Tega was widely considered an industry leader and had a monopoly-like hold on the global market. This was a completely new technology for India, as traditionally, mill linings have been made of steel and not rubber. This new technology also posed a big challenge to Mohanka, as he had to create his own pool of engineers. But the going was not easy. Madan had to steer through a number of challenges, the first one being convincing Tega to become their agent in India, which they refused initially. But Madan was not a quitter. He travelled all the way to Sweden to convince Tega's top guns. They were quite impressed by his pitch and they agreed. The other big challenge ahead of Mohanka was to get a nod from the Indian government, which then was under the license Raj. After 6 harrowing years of going through all the maze of red tape, Madan got the green signal in 1976 to set up a manufacturing facility in Kolkata, in which Tega AB picked up 40% stake. The plant went on stream in 1978, but much to Madan's astonishment, there were no takers for the product. The pre-market surveys had belied the reality. The Indian mining industry, dominated by PSUs, did not accept Tega's products. Add to that, his family's interference in his new venture did not go well for Tega employees. Things came to a boil, and Madan decided to relinquish his stake in all other family businesses and concentrate on his pet project.
Well, there were many reasons. We were trying to introduce a new concept of replacing steel with rubber. So it was not selling a product. So that took quite some time to educate the customer to adopt a new product. Secondly, the market potential that we had estimated, there was a gap in what could be convertible and what was the total potential. So because of the large gap, the intake of orders was very, very little, and that kept the company at a high cost and led to bankruptcy. Also, there was some problem or resistance from the customer to adopt it fast, because most of the companies were not aware or were not thinking much about the cost of downtime at that time as they think today. So with the result that the motivation of the people to adopt the new technology was less, and that led to bankruptcy.
Madan had no other options but to make Tega a success. He rejigged his strategy, operated on a wafer-thin margin to keep the business going. Slowly but surely, Tega made inroads into the Indian mining sector.
The breaking of ice to the customer for a traditional product like mill lining was a very important aspect to successfully establish Tega as a major player in the mining for mill lining products. And in the initial stages, we emphasized a lot on the technical expertise of Tega, both at the front end and at the back end. The technical expertise which was visible during discussion allowed us to get a trial. These trials finally convinced the customer that we were able to deliver what we had promised. This deliverance of the technical expertise allowed us to establish in a few major customers in the world, and thereafter, the reference of the successful application was very important and allowed Tega to become a major player in the mill lining segment in the world.
Tega's licensee agreement with Tega ended in 1998, which was a turning point for the company. This changed the company's fortunes, as now Tega was free to sell mining products in the international markets where there was a huge demand. In other words, it would compete with Tega. Tega's first international order came from Ghana in 1998. Tega Industries soon started growing at an unbelievable 50 to 60% every year. Today, Tega Industries is a name synonymous with pioneering achievements in the mineral beneficiation, mining and bulk solids handling industries the world over, and that's clearly visible in its growth chart. The turnover has increased from 173 crore rupees in FY 2010 to 386 crore rupees in FY 2014, and profit after tax is 70 crore rupees in FY 2014. On that note, it's time for a short break. When we come back, CNBC TV 18's Sumaira Abdi talks to Hemant Vora of ICICI Securities to decode Tega Industries' success story. Stay tuned. Welcome back. Tega's core expertise lies in designing, manufacturing and distributing rubber mill liners, which has made Tega the choice supplier for global mineral and mining companies. Sumaira Abdi caught up with Hemant Vora of ICICI Securities to get his insights on what made Tega Industries a success story.
This week we're talking about Tega Industries. So if you see their story, it almost sounds like to hell and back. At one point they even were close to going bankrupt, right? So as an investor, what does a story like this actually mean to you? Would you put more money because of the perseverance of the promoters, or do you think this was just a tough business for them to crack into? What's your analysis of the last 20 years of their business?
I think you used a wonderful word out there, perseverance. If you look at the history of the company, Mr. Mohanka actually was going through a journal on mining, and he read an article on how minings are done globally. And Tega is a company that he came across in that journal, and after reading about it and doing some more research on it, he found the company to be very interesting and the kind of products they are doing. So 71 to almost about 2 to 3 years time, he kept chasing the company, went and met them a couple of times, engaged more with them. And way back in 1976, he actually formed a joint venture with the company. Those were the early days as far as India M&A and joint ventures are concerned. So in 1976, he formed a joint venture with this company, typically to look into this. So I think, the passion, the drive, the interest in the business comes right from that early age. So, and every business will see its own cycles in terms of up and down. But the way Mr. Mohanka has actually stayed with the company and stayed with the passion for all long has actually paid off well for him. And we are actually seeing that how it has turned around completely in the last few years, okay, and come out as a second largest company in the world. I mean, that's commendable for him.
Yeah, and it's not just, that he stuck on or he didn't lose heart, but he also came up with a differentiated product line in the industry, right? So is that what also attracts you to a person like Mr. Mohanka?
Very clearly. I think what he maintained, his focus is on three technologies, which are very important for this industry. One is the mechanical, second is the grinding, and third is rubber. I think he kept his eyes and focus very clearly on these three things. One of the first guys to actually come down and talk to Indian mining companies and tell them that, hey, look, let's move from the traditional steel stroke metal grinding systems to these rubber grinding systems. That's a big shift which has happened. And thankfully, that's actually, as I was mentioning earlier, that's actually proved well for him. And he has been able to convince the Indian companies as well to go through that technology. Yeah.
And you said, right, that they're the second largest player in the world now in this space. How does one actually become a global player? I mean, what is it that propelled this industry, as opposed to any other, and made them the world number 2?
I think the way they looked at this business is that mining typically, while India does mining, but most of the mining happens in the other parts of the world. So very clearly Australia, Chile, some of these other geographies which they clearly focused on. And what they did, they adopted a two-pronged strategy. One is how to enter that market, number one, and how to get the customers in that market, very clearly. And the technology, the know-how, the process, everything will come along with that. So very, very focused inorganic strategy they had in mind. Okay, and in the process they actually went ahead and acquired two companies, one in Chile and one in Australia, right from the time that 2011, when they started off looking more into the global markets. And these two acquisitions have proved phenomenally well for them. And today, they've continued with the name. They have the customers in place, they have the distribution network in place. Okay, they also ensure that the inventory and the process know-how, everything continues out there, which helps them to kind of cater to the needs of the export market.
Sounds like it's been a busy 20 years, right? Maybe that's why he didn't have time to think for an IPO. But is that something that you would advise him to list?
I think so. I think so, very clearly. Maybe, but I only feel that maybe it's about a couple of years away from today. He still has a little more juice left before he goes into the IPO stage. A few acquisitions that currently the company is looking at exploring. I think if they click in the right direction, then I think it will be a very good story. But overall, I think it's a great IPO story to look at.
Okay, so let's go back now to their inorganic activity, because you spoke about the kind of acquisitions that they have in the works and the ones that they've done already. A, what do you think of their style of M&A? And B, do you think it might be easier for them to continue with this style of working post-listing?
I think, see, the way they have looked at the acquisitions, again, is very, very selectively. Very, very selectively. So they have gone ahead to companies and they have approached companies only when they believe that, this is something which is going to add value to it. Okay, every single deal they look at very, very cautiously. 2008, 2009 was a period, just before the Lehman crisis was a period when Indian companies were going all out. Okay, they were acquiring companies left, right and center. And at that stage also they had enough opportunities on the plate to look at. But they were very, very cautious. In fact, it was 2011 when they did one of the big acquisitions, $35 million in Chile. And post that, another acquisition in Australia, a smaller size. And even after that, they had a few more opportunities, but they didn't do it because of obvious reasons. It didn't add so much value as it is required. So even going forward, once the IPO happens, I think whatever helps the company and it's in the benefit of the company in the inorganic way, they would definitely be open to look at. Because aim is to reach, if not number one, at least close to number one, okay, as close as possible, and to expand the product portfolio. So whatever can add in the product portfolio, they would be more than happy to look at that.
Yeah, there's one of those famous brand sayings which says it's the number two always tries harder. So I guess that's where Tega finds themselves. But listening to the management, we heard them say that they're targeting about $500 million in terms of turnover over the next few years. What do you think will be the key triggers that will take them to this $500 million mark?
I think it's a very aggressive target that they have kept for themselves. $500 million in the next 3 years is definitely quite aggressive. But the key things that they would continue to focus on, and they would want to continue to focus on, is how the Indian market revives. Okay, and they are definitely working on that, talking to people, and globally, whatever acquisitions they have done, how best they can achieve, the best out of it, and look at other geographies, entering new markets. So these are three-pronged strategy as far as market is concerned, and parallel on the product and technology to see that how they can expand the fleet of product. So I think as a combination of the market and combination of the product, I think that's the best solution for them to see how they can achieve this target.
All right, do stay to that, and all the very best.
Thank you.
Hemant, thanks very much for joining in.
Thank you so much.
Well, that was Hemant Bohra's analysis of the company. On that note, it's time for another short break. When we come back, we look at the road ahead for Tega Industries. Stay tuned. Tega Industries' attractive growth story has seen private equity players eyeing the company. TA Associates has picked up around 15% stake in Tega Industries for $40 million. Sumaira Abdi spoke to Dheeraj Podar of TA Associates to find out why they invested in Tega Industries.
Hi, Mr. Podar. Thanks very much for joining in. Tega Industries is a business where you guys picked up about 15% stake, right, pretty early on. So what were the compelling factors that actually made you invest in this business?
So when we met Tega for the first time, it was in the context of them looking to make an acquisition in the international markets. We were actually pretty amazed by seeing what the Mohankas had already built. Tega was an international company. They had presence in every large mining market of the world. Their clients were the big mining companies in gold, copper, iron ore, and they were known for technology and product innovation. Tega was already the number 2 player in its industry, and we were pretty enthused by the capability of an Indian entrepreneur to build a business like this, to have direct marketing and presence across the world, and be known for quality as well as being competitive when it comes to price and other aspects of the product. We were also pretty enthused by the quality of the management team and their governance standards. This is a company which had a Big Four auditor since inception. They ran a proper thorough board, including independent members, and we got a feeling that they were truly looking for a proper partner who could help grow their business over a period of time, which frankly led us to do a lot more work and understand that the business was indeed pretty attractive. And we were pretty happy that we could make the investment.
All right. And finally, would you look at investing further into this company?
Tega is already a large business, and frankly, it generates a decent amount of internal accruals. They do have ambitious plans on what they want to do in the future, including new product introductions, acquisitions, expansion into new markets. We think it's possibly more of an IPO candidate in the near future as opposed to raising more private capital, but we'll see. We are supportive of the business. We'd love to actually invest more if the opportunity came along.
Mr. Podar, thanks very much for speaking with us.
Today, Tega Industries is proving to be a formidable competitor to the global number 1 player Metso, which is estimated to have above 60% share, while Tega has close to 15% market share. To keep its stranglehold in the global market, Tega has made 3 key acquisitions in Australia, Africa and Chile over the past few years.
Well, our 5-year vision for Tega is definitely to grow quite exponentially across all our product segments. Our plan is to grow both organically and inorganically. So while organically I think we continue to march ahead, I think the inorganic part of our business is something that's going to be very important to us over the next 5-year period. I think Tega is going to continue to be acquisitive over the next 5 years, and in our industry, targets of a size that we have in mind are very few to come by. So as and when those opportunities present ourselves, we would definitely be exploring such avenues of growth inorganically. So if I would like to put a number, of course, over the next 5 years, I think any number north of $500 million in terms of top line would definitely be something that we would aspire to achieve.
The Mohankas are leaving no stone unturned to explore new avenues for growth, be it organic or inorganic. Towards attaining this objective, they are open to an IPO for their funding requirements. Looking at Mohanka's game plan, Tega Industries may soon capture 50% of the $1 billion global market.
Well, that's certainly a very interesting story. Clearly, what comes out loud and clear is that very few companies the world over have been able to enter or stick on to the mill lining segment. Tega is an exception, and it holds a dominant position in this space. The company's engineering expertise is clearly visible in the fact that global companies are increasingly sourcing their inputs from Tega. Tega Industries is surely a company to watch out for and invest if and when they go public. On that note, it's time to say goodbye. We'll see you next week with another interesting episode. Till then, keep watching CNBC TV 18.